Liquidity is debasement of currency. Debasement of currency is the driver of crypto prices and all asset prices. So it all lies ahead this year. What's interesting is the discussion around when the cycle ends. So I think we've got a longer cycle. It will almost certainly outperform the last cycle and looks more like 2017 to me, which guess what? Was a Trump cycle.
The last time Trump was in office, we saw a massive crypto rally, and this cycle could be even bigger. That's the latest prediction from Real Vision CEO Raoul. According to Pal, the crypto market is exactly where it should be at this cycle stage, entering what he calls the banana singularity, the phase where things start to go parabolic. But here's what makes this cycle different. Pal argues it mirrors 2017 far more than 2021. And that's a huge deal for investors. In 2017, Trump took office, pushed for a weaker dollar, and China ramped up stimulus, fueling a historic crypto bull run. With Trump potentially back in power and similar economic shifts unfolding, Pal sees the same setup again. Unlike in 2021, when economic conditions and liquidity peaked too early, this time, the cycle is just bottoming out. That means the bull run could last well into early 2026, a much longer window for gains. Stick around to the end of the video as Raoul breaks down his latest insights on where crypto is headed. Also, only a small percentage of my viewers are subscribed. If you enjoy finance videos, consider subscribing or liking the video. It's free, and you can always change your mind. Now, here's Raoul with his latest outlook.
Where are we now compared to what your expectations were back in November, December when during our last interview?
In terms of which? Crypto?
General market sentiment, from a macro perspective as well. Has that changed your thesis in any way? Has that altered it in any way? More bullish, less bullish?
No, it's exactly where I think it is, which is we're now in the part of the cycle which tends to be what I call the banana singularity, when things start to get really crazy. We've seen that with the Trump coin and whatever. What we're still missing is the massive liquidity injections that should come into the market from the central banks and governments. We've got the US will be draining what's known as the Treasury General Account, which is their checking account. That will increase liquidity significantly in the US over the next few months until they negotiate the debt ceiling. I think there is a broader deal that's going to get done with the dollar and China, and think the US is been using the strong dollar as a negotiation point with China. China can't stimulate its broken economy right now until the dollar weakens, because if they stimulate, they'll break the peg against the dollar, which they do not want. They don't want capital flight. So you need the dollar to come down, and then the Chinese can stimulate and help the world economy recover. The US knows this, and it's a tool for everybody. If Chinese economy starts to recover, they'll buy US treasuries. So we're at the really interesting point in the cycle where all the debt has to get refinanced, all the games have to get played, the dollar needs to weaken, rates will come down, and everyone will refinance their debts by adding liquidity. What does that all mean? All of the macro stuff, all it means is number go up. Liquidity is debasement of currency. Debasement of currency is the driver of crypto prices and all asset prices. So it all lies ahead this year. What's interesting is the discussion around when the cycle ends. So a lot of people have PTSD because of the last cycle, and that finished early. It peaked in April, went down 50%, up, made a new high, and then kind of just failed. That was driven by the fact that the business cycle, the ISM survey, peaked in March 2021. Why? Because we had that snap crash from COVID and then snap back up, and the business cycle peaked, as did liquidity. So the cycle peaked. So as it went down again, tried to come up again, but kind of failed because there was no follow through because the business cycle had peaked. This time around, the business cycle is actually still below 50, which is the slow growth zone, not recession zone, but slow growth. And all the forward looking indicators say the US economy and the global economy is about to get a lot stronger. And so we're nowhere near peaking. In fact, we're only just bottoming. So the chances are that we might even go through all the way till Q1 2026. So I think we've got a longer cycle. I think it will almost certainly outperform the last cycle and looks more like 2017 to me, which guess what? Was a Trump cycle. And we entered the Trump cycle last time with tariffs and, oh my God, this and that. Rates were going up and the dollar was going up. Trump came into office and immediately said the dollar's too high. The dollar came lower. China were also near recession. They had to stimulate. They spent the rest of the next 2 years stimulating. And that's what drove the crypto cycle in 2017. So we've got an incredible similar setup to 2017, which you were around for that one. It was bullish as hell.
So for people that weren't there in that cycle compared to the last one, essentially, if we see a similar cycle, then we'll probably see it go into November.
Yeah, or maybe, as I said, it could even push into, that
early.
cycle, alts peaked in Jan or Feb, right?
They did, yeah.
For anyone who wasn't around in 2017, that cycle saw a massive rally, with altcoins skyrocketing months after Bitcoin and taking the market to shocking new highs. With similar conditions, another extended bull run could be on the horizon, lasting much longer than most expect. With Trump back in office, Powell and other analysts predict a similar setup, with potential rate cuts, increased government spending, and global liquidity expansion all creating favorable conditions for another major rally. This time, however, there's a key difference. The approval of Bitcoin ETFs, which wasn't an option in 2017, has already attracted billions in institutional capital, pushing Bitcoin past $100,000 for the first time. Meanwhile, on-chain data shows long-term holders are accumulating, supply on exchanges is dropping, and global interest in crypto is rising, all signs of a market primed for further growth. Now, let's go back to Raoul Pal as he discusses further.
But liquidity is the big daddy here. I got caught out by this in 2017. By about April or May, I sold out of my Bitcoin. I was up 10x because I bought it at 200. It was trading at 2,000. I'm like, it's a pretty good trade. I took the money off the table. It consolidated for a little bit. Then it went up another 10x into the end of the year. People can't understand this. It's like, if Bitcoin went up 10x from here, and we were $1 million. Now, I'm not expecting a 10x, but what I'm saying is people did the same thing then. And what happens is you sell out positions, the market corrects. And because liquidity is still the driver, everybody gets forced back into their positions. And that creates this violent end of year move. That's possible. I'm not saying it's definite, but I think of improbabilities. And that's where my head's at.
So when you put all these factors together, what's happening in the SEC and how bullish the current administration is towards crypto. And when you look at the macro factors as well, could we see a super cycle if we discuss it this time around?
I'm going to flip it a different way of looking at it. Has Amazon been in a super cycle? Has Microsoft? Yeah. Has Google? Yeah. Have they all had massive correction periods during the downside of the 4-year cycle? Yes, every single time. So what you don't do is you don't get rid of the cyclicality. It's the compounding of returns over time. Now, the only change that I could say is possible, and I think is likely, is that the downside in Bitcoin is not as big as people expect. The free money trade is you try and sell out somewhere near the top, or even if you don't sell out, you're waiting for the dip to buy more. The answer is usually wait till it's down 70%, 75%, start buying, and you make a 20, 30x on that trade every time. My guess is it probably ends up down 40 and not down 75. And that will create a lot of complications for people who are waiting for the big leg lower. People are going to get caught out, I think, in this cycle. Now, that doesn't mean all of the long tail stuff doesn't go down 90%. Of course it will. But I'm thinking about Bitcoin itself as the anchor price to this whole thing. I kind of am the impression of what changes is the downside is reduced in Bitcoin. Crypto is this incredible, fast, super high velocity, creative destruction cycle. You don't know what's going to be really valuable until the bottom of the cycle. The things that survive become the best trades. Solana, Ethereum. So Ethereum in 2019, absolute killer trade. 2018. Solana in 2022, absolute killer. So what you need to see is when those things go down 95%, everything goes down 95%. So now you've got all of these things at a discount. Your job is to find out what really has network effects, what is really powering an ecosystem. And what you'll find is a bunch of these are kind of dead chains because they were just using money from the foundation to pay for economic activity. But then you looked at Solana and there was a ton of developers building. I like the cyclicality where you wash out all the bad ideas. People are testing innovation, and that's good, right? It's a lot of innovation. You do VC, tons of VC things go to zero. But if you get the right ones, they don't. You can make a lot of money out of them. So that I think is...
The failure rate in crypto is just so much higher than traditional VC. And I'm just hoping
there's more crypto projects.
Just the amount of volume. Yeah.
Also, don't forget, unlike VC, these are coming to market instantly. So if you were to look at really early stage seed investments, and if you were to have a real-time mark to market on those, they'd be horrific. Are we going to die today? Are we going to survive tomorrow? Are we going to die today? I mean, that's all it is. They're the same. It's the same thing. It just happens to be the earlier stage bit that's hidden, because in VC, there's no mark to market really until a token launches or equity becomes tradable, i.e. different people want to pay for the equity.
Liquidity is the biggest driver in this cycle, and history proves it. In 2017, many thought the rally had peaked, including Powell himself. He sold Bitcoin after a 10x gain, thinking it was a solid trade. Then it exploded another 10 times into the end of the year. Many got shaken out, only to be forced back in as liquidity kept pushing prices higher, creating a massive year-end surge. Powell sees striking similarities this time around. With Trump back in office and liquidity expected to flood the market, the setup for another extended bull run is in place. But this cycle could be even bigger, with institutional adoption, Bitcoin ETFs, and major corporations now involved. The real shift may come after this run. Historically, Bitcoin has corrected 70 to 80% in bear markets. Powell believes this time could be different, with a smaller 40% decline instead of a full wipeout. That changes everything, as many waiting for a massive drop to buy back in could get left behind. But as always, crypto rewards survival. The investors and projects that withstand the cycle, like Ethereum and Solana did in previous years, could be the biggest winners in the next wave. With innovation moving faster than ever, those who stay in the game will have the best shot at massive gains. Remember, if you want guidance through cryptocurrency's exciting but sometimes unpredictable world, our daily 5-minute crypto newsletter is here to help. Don't pass up the chance to stay updated and make informed choices in the crypto market. The link is in the description below. Anyway, guys, I hope you all enjoyed today's video and that it gave you some value. I'll see you all at the next one. And as always, all the best.